All right, so welcome to, again, we're doing chapter 5.3. So this is going to be dealing with breaking down the costing methods that exist when we're dealing with periodic inventory. Okay, and the first one we're going to look at is Fifo, what is Fifo? First off, let's talk about what a costing method is. So when we talk about making purchases of inventory, okay, then we're constantly buying inventory, right? Now, the one way that we're keeping track of it is, yes, we are going to check upon how many items are available at a certain given period. But in this case, it's only required when you actually physically do a physical count of inventory. Now, one thing that we have to also understand too is this is where we're going to come into talking about sales in chapter 6. But for now, all we really care about is just understanding the main focus, which is just purchases only. Okay? Now, the reason why a costing method is coming into play is because at the end of the day, right? When we actually sell our items, we're not keeping track of sales. All we really are doing is just keeping track of the purchases that we've made. Okay, so all we're doing is collecting how much inventory have we collected so far. So a purchase there, a purchase there, a purchase there. But at the end of the day, when we actually go down to the basement or the warehouse to take a physical count, you can put 2 and 2 together. If you started out with 100 units, right, and then at the end of the day you count it and you only have 60, you could automatically assume that, hey, I must have sold 40 units sometime today. And this is actually, I wouldn't say would be the best way to keep track of your items because, again, anybody could have gone down to the basement and taken one for themselves. And you wouldn't know. You would have just assumed that it was written off as a sale. So that's also like a little downside about periodic inventory. But however, if it's something like you only buy 10 units of an item and you sell it, and then you know for sure that when you go down and physically take a count, you sold like 4 of them, then yeah, that's a lot easier to manage and to calculate. And that's precisely what periodic inventory usually is. It's not for large quantities of inventory. It's more based on things that you don't really want to check often, or maybe you don't order it as often as perpetual inventory. But with that being said, when we're dealing with costing method, what we're actually really dealing with is how do we calculate how we sold the items. And that's going to be very, very, very important because when we learn the 3 different ways, okay, which is going to be FIFO, LIFO, and weighted average, we're going to understand, well, what type of costing method will benefit me in my business for the long run. And I'm going to give you some examples real quick. So FIFO stands for first in, first out. So this is very typical of grocery stores because grocery stores, they have perishable goods. Something that is perishable or has some kind of expiration date. So for example, milk, right? You can't expect to buy the first batch and sell the latest batch because all of the first batch of milks, right? They have an expiration date. They're going to go bad by the time you sell finish selling your last batch. So that's the mentality of understanding first in, first out, is that generally when you buy the first batch, you sell the first batch, okay? Or you get rid of the first batch. Okay? And calculating usually things like that can kind of benefit you in a long run. If it's like let's say if it is milk, right? Milk it fluctuates. It's sometimes low price, sometimes it's expensive, sometimes it goes right back down. So at least something like that it's manageable, because at the end of the day, it's always going to be in some kind of it's a fluctuating price range. So it doesn't matter how you cost it, but you should cost it as first in, first out. Okay? Now the next one is going to be LIFO, which stands for last in or the first to go or first out. Okay? And typically this is usually for any items that have a long shelf life. So if they have a long shelf life, or their shelf life can exceed beyond, a certain, beyond years. So, for example, household items. It doesn't matter whether you purchased it this year or last year. You're still going to sell them, and it doesn't matter because it's not a perishable good. It still lasts for a long time, usually household products. Or, for example, I bought a mop. Right? A mop doesn't go bad over time. Yes, maybe next year their models are a little different, or maybe the handle's a little different, something that looks stylistically different, but the essential item of the mop, right? It's not going to deteriorate. It doesn't have a shelf life, or it doesn't perish. So usually those things are going to be, so, it doesn't matter how it's sold. Maybe the last batch will be sold, the first batch will be sold. But in this case, the most best example I can give you for a LIFO situation is going to be an electronic goods store. So example, right? Apple sells iPhones, right? But every year, iPhone comes out with the latest and greatest model. Now, how LIFO works is every year they release the new model. You can expect everyone's going to buy the 12 over the 11s or the 10s. So thinking it that way doesn't matter. Even if you had the other remaining, they're not going to stop you and say, no, we need to sell out completely all of our 10s before you can receive the 12. No, it doesn't work that way. They still are selling the rest of the models. However, the more popular one, or the new release ones, are generally going to be sold first. Now, essentially, they're the same exact phone, just a little more, detailed to them. So yes, that's a perfect example of how LIFO works. Okay, and then lastly is going to be weighted average or moving average. Okay, and we'll talk about the difference between the two. So periodic is going to be weighted. Perpetual is going to be moving average. Okay, and usually a good example would be something that is a necessity that everybody needs. So it's like a resource. For example, water, right? Water bottles, to be more specific. Water bottles sell out at any given time, at any given day. Okay, so waters usually, right, they're restocked every single day, or they're restocked every week, because it's a necessity that everybody needs. Everybody needs to buy water at some given point, and water is always going to be consistent. So with that being said, you not only are you going to, it doesn't matter whether you sold this pallet first or sold that pallet last. It doesn't matter, because at the end of the day, they're all going to get sold. And the one thing that you have to also understand is that you're constantly buying all these pallets of water, because at the end of the day, it's going to get sold whether you have a sale or no sale, because it's a product that everyone needs. So with that being said, you want to, instead of saying, well, this palette cost me $159 and that palette cost me $206. You actually, what you're going to do is, because it is something that tends to be sold very quickly, what you're going to do is you're going to average them by, say, you're going to add this 159 plus this 209. You're going to add them together to get an average cost, which then you're going to average cost them out when you sell them. So instead of hurting you because it cost you too much, or hurting you because it was a cheaper cost, you're actually stable in a constant line. So this one is where it's a product that is a necessity, it's a resource, and you're buying tons and tons and tons of inventory for this particular product, because at the end of the day, it's always going to be sold. Okay, and water bottles is my best example because it's a necessity, right? And then last type of costing method is going to be specific ID. For the sake of this class, since the other three are kind of difficult and actually more common ones to use, like I said with my examples, a grocery store. Yes, you're going to commonly use that if you do potentially open a grocery store. If you open an electronics store, that's definitely a common thing, or a retail store. And then same thing with average cost or average weighted average. You're going to come into a scenario where you're going to have to pick between one of these three methods to calculate for your inventory. All right, where specific ID, because of the other three, it's actually not as important, or it's actually a little more complicated than that. And but a good example would be an auto repair shop. So specific ID, okay? So when a car comes into an auto shop, you have to get every single aspect of that car. You have to get the car model, the car brand of the car, the year of the brand, and the specific part that the car is coming in for a repair. So you're not going to have these items laying around because, again, you can't get a water pump and say it fits every single car. It's actually specific. So again, you can have a generic water pump for a generic, for example, like Toyota or Honda, that's more frequently seen. But you can't apply that water pump for a Mercedes, for a Volkswagen, or for a Mazda. Those things don't work. So that's why it's very specific on its identification, is that you're going to have to identify the manufacturer model, the year of the car, because again, every year it's going to come out with something new. Maybe it's more ergonomic friendly, whatever you want to say. But every year, every model, every car type, it's going to have a specific inventory item. And usually what's going to happen is they come with a manufacturing ID number, or a specific part that they made specifically for your store. So those kind of things, again, when you're dealing with inventory on this kind of hand, you're not going to have it in the back of your basement. It's going to be more like when the car comes in, you're going to write down all the details. You're going to call and order that part right then when it happens. So again, specific ID is a little more complicated in regards to calculating, because you just don't know what is going to be in store for you when it happens. So specific ID, we're not going to learn. However, I want you to recognize that it is indeed a costing method that exists for inventory. Okay. Now, another comment too is that there are actually a lot of other costing methods that does actually exist out there in the world. And then those are broken down based on specific, so more for corporate level type of managing the inventory. But however, for this one, I only want you guys to know 3. I mean, you need to know all 4, but we're only going to be practicing 3 in chapter 5. Okay. Any questions in regards to costing method?
Nope.
Okay. So again, today we are going to be learning the very, very, very first method, which is going to be the first in, first out method. Okay. So let's go ahead and talk about what formulas are we going to be looking into when we're talking about doing periodic inventory, but how we're going to cost it. So the idea is that when we look at a inventory worksheet, there's going to be columns, and the columns are pretty much is going to be what you're going to be filling in the formula for. So when we talk about understanding what a purchase price is or purchase expense, we're going to understand that it's going to be quantity times the unit cost, okay, which is going to give us our purchase price. Okay, straightforward. Our total cost is going to be our purchase price plus our freight cost to get our total cost, okay? And then the cost per item is pretty straightforward, right? You want to average, or you want to know how much it costs for one item to get you to your grand total of your total items. So that's going to be your total cost divided by your quantity. And then the next 2 equations, it's only going to apply for the very bottom portion. And when we go over the example, you'll understand what I mean. So the bottom portion is going to ask you, how do you know how many goods are available? Pretty straightforward. If you have beginning inventory or pre-existing inventory, you're going to add that up to your new inventory that you just purchased. Okay? And then, of course, to understand how much goods you actually sold, whether you're given the factor of an ending balance. So again, most rule of thumb is, in order to find your ending balance, someone needs to go physically down to the basement or to the warehouse and to count how many items you have left remaining in your inventory. And that's going to be a given number to you, is the ending balance, okay? Once you have the ending balance, it's pretty straightforward to understand how to solve for the cost of goods sold. You're going to take your number of goods available, and you're going to subtract your ending inventory to get you your total cost of goods sold. Okay? Straightforward, these formulas. Now, let's go ahead and see how this applies in this scenario. So first things first, here's a couple short scenarios that are going to happen here, and we're going to calculate and actually journalize how these inventory purchases happen, and when we record our sales. But again, like I said, the purpose of this entire course isn't to focus on sales just yet. All we're focusing is on just purchases only. So example here is on June 1st, you made a purchase of 100 toys for $1.25 each with a freight cost of $25. Okay, and then the other 2 are on June 11th, you also made a purchase of inventory of 100 toys for $1.28 with freight of $26. And then lastly, on June 15th, you had a total of 80 toys left in inventory. Okay, so let's go ahead and break it down. So if I'm buying toys for $100, okay, 100 toys for $1.25. What is my journal going to look like?
That is purchase expense.
Purchase expense, good. And what else?
Freight expense.
You're going to have freight expense. That's correct. So because, so this is what's going to happen. You're always going to journalize first and then enter everything into your inventory worksheet. So that's always rule of thumb. The journal always comes first because one thing is you have to do is you have to recognize, did you make a transaction and does it affect your company? And in this case, we're focusing on inventory. So yes, that's how you're going to do it. You're going to you do purchase expense, freight expense, and however you paid for it, boom. So now we're going to be introducing you to the actual inventory worksheet. So here I place in the date June 1st. Okay. I have my quantity of 100 and my unit price is going to be $1.25. So now in order to plug in my formulas, which I talked about earlier, purchase price is determined by quantity times the unit price, which pretty straightforward. It's going to be 125. Then the next formula is going to be your total cost because freight is already given. So your total cost is going to be your purchase price of $125 plus an additional $25 for freight, which gives you a total cost of $150. Okay. And then the cost per item is going to be your total cost, which is $150. And you're going to divide it by your quantity, which is 100, to give you a grand total of $1.50. Now, this cost per item is going to be the price or the cost that you're going to use when you sell your items, because it's not only does it cover all the costs that you originally invested in order to obtain the inventory. That's the baseline of your cost. That's going to be the starting point of your selling price. Now, don't confuse your selling price with your cost per item or your cost of goods sold, okay? Because there are two different things. When we talk into sales, sales has a profit margin in it. You have the baseline where that's the bare minimum of what you can sell the item for, because that's what's going to cause you to break even. As in the price that you sell it for is also going to include a profit that you want to obtain as well. So it could be 40%, 50%, or 100%. So that's how you're going to determine this. You determine the selling price from this. However, when we talk about getting rid of inventory or selling the inventory, or you're no longer having the inventory, you're actually going to remove it by costing it out. And we'll talk about that when we reach the end of this, okay? So any questions on how to fill out this worksheet? Okay. So then now scenario number 2 was that I purchased 100 toys at $1.28 and my freight was $26. So here's my journal here. That on June 11th, this is what happened. Okay? And then now I'm going to apply it again to my little worksheet here. And I solved it already, right? I took my purchase price of 100 items, multiplying $1.28 to give me 128. I'm going to add my freight of 26 to give me a grand total of 154. And then I'm going to solve for my cost per item, which is going to be 154 divided by 100, giving me $1.54. Okay? Now, the most important thing is once we've reached the end of the period, so we know that we're doing it at every 2 weeks, right? We have someone that goes down to the inventory basement to find out how many items are left in inventory. And in this case, it's every 2 weeks. So our first initial thought that we have to do is we need to total up every single column except for obviously the unit price column. That's not going to really affect us. So the first thing is, what is our total quantity that we've purchased? Well, 100 plus 100 is 200. Okay. And then here for your total purchase price, how much did you actually spend? So you're going to add those two numbers together, the 125 plus the 128, giving you 253. Then you're going to actually solve for the total amount of freight, which in this case is 51. And then you're going to get your total cost. Now, you can either add up the column or you can add up what your total purchase price was plus your total freight. It doesn't matter how you solve it, just as long as this number here is the total cost of your entire purchases, okay, which gives you 304, okay? Those are the only 4 columns that you need to add up or calculate, okay, the totals for. Once you've done that, then there's the second half of the worksheet that you have to fill out. Okay, and it's going to look similar like this. So it's going to be a column, and how you fill it out is basically exactly how you solved for your total entries here. Your total amount for quantity, your total amount for the price, and your freight, and your total is all going to reflect in here. So again, first thing is, what's your total purchases? Well, you purchased 200 items, right? And it cost you $253, okay? We're going to skip purchase returns and allowances for now, but once we completely understand the underlying, the beginning first, then I'm going to introduce you, and we're going to make it a little more complex to see what happens when a purchase returns and how it affects your inventory. But for now, I just only want you to know the basic concept here. So once you've got that, then you're going to add your freight, because freight is not a quantity. Freight is an additional separate cost. So it's going to cost me an additional $51, bringing my total net purchases to be 200 items at a total of 304. Okay? So again, this is where we're going to practice using cell references in this particular, when we do our inventory worksheet, okay? Once we have that, then we're going to bring that back down to our bottom portion, which is where we talked about goods available. So the first thing is, do we even have beginning inventory? In this case, we don't. But in the next section after this, we're going to talk about what happens when you do have beginning inventory, okay? So in this case, we do not have beginning inventory. And then what's going to happen next is, now we have net purchases. So net purchases is exactly what we saw from right above. We're just going to pull that information down, and this is going to be our total goods available, right? We're adding 0 to 200. That gives us a total available is 200 items, okay? And of course, our total cost is going to be for $304, okay? And then now, from our scenario, we understood that on June 15th, you only had a total of 80 items left available in your inventory. So that's going to be considered your ending balance. And like I said, you're going to be given either or, but most cases, you're for surely going to have an ending inventory, because someone needs to physically go take an account of exactly how much inventory you actually have left on hand. Okay, so again, now we can go ahead and begin our calculations. Okay, so this is just filling out the table as is. So now the next step is we're going to solve for our cost of goods sold, which we talked about was your goods available minusing your ending inventory. So in this case, if you started out with 200 items and you only have 80 left, what is your total cost of goods sold? Yes, 120. Yes. Okay. So now here's where we're actually going to talk about costing to actually solve for the actual cost of the goods sold. So here we're going to have your inventory worksheet, and it's going to have a table and a little workspace that you're able to look at. So in this case, because my PowerPoint slide is a little small, you're going to have the top portion, which we just solved for, and then you're going to have this bottom portion here. And it will make sense when we actually look at it. Now, looking at our inventory worksheet, we see that we have two batches of quantities, or two batches of inventory that we've purchased, right? One on the 1st and one on the 11th. Now, understanding the first in, first out method, we're going to start from the very, very first batch that we actually purchased, which is going to be the 100 items that's costing me $1.50. Okay? So, by understanding that we're going to cost it by removing one batch or selling each batch, we see that the first batch that we have is only 100 items, but we sold a total of 120 items. So at least the first 100 can be covered by this entire amount right here. By understanding that we're getting rid of the entire batch, you can already automatically assume that you're going to eliminate the whole thing. So you don't need to do a cost per item to find out exactly how much each item is. We're going to actually utilize the whole quantity because, the whole total cost, because we're getting rid of the whole entire batch. So that entire batch of 100 items is going to cost me $1.50, but I know if I'm going to get rid of the whole thing, it's $150 to sell out that entire batch. Okay, so once you've done that, then now you only have 20 items left to sell. And the only batch remaining is going to be that second 100 batch right there. So what you're going to do is now you understand there's only 20 items left remaining that you have left to sell because you already sold the first 100. So by understanding that you only have 20 items left, now this is where you have to actually calculate the quantity times the cost per item, okay? And so you're going to take 20 and you're going to multiply it by the $1.54, right? Because that's the amount for the second batch, right? That's the cost per item. And you're going to get a grand total of $30.80, okay? Once you've done that, what you're going to do is you're going to add them together, right? 100 plus 20 equals 120. So what's 150 plus $30.80? It's going to give you a total of $180.80. And that's where you're going to plug it into your cost of goods sold. Okay? Everyone with me so far?
No.
It will make sense when we actually do it. Okay? So now that we've solved for our cost of goods sold here, actually, where are you confused? Maybe instead of keeping going forward, I could go ahead and take a step back. Where are you confused?
About on the side, inventory this one. Where did you get the figure on the inventory on the right side?
Where did I get the what?
The figure.
Which one?
The inventory side on the right side.
Yep, yeah. Where did I get these from?
Uh-huh.
I got it from my inventory worksheet. So going back, I'm gonna see if I can go back all the way. It's from this. It's from this worksheet right here. Mm-hmm. I have my batches of 100 for my June 1st, and my second batch of 100 on June 11th. And if I follow through, I already saw for the cost per item, which is the first batch was for $150, and the second batch is for $154. But because my slideshow is too small, I couldn't fit it on the worksheet without having you guys look at it and not be able to read it. So that's why it will make more sense when we actually look at the inventory worksheet ourselves after this. So I got the figures from this section right here. Okay. Okay. So then what's going to happen now is, now that we know and that we've figured out that the cost of goods sold is indeed going to be 120 items, and my total for it is 180. Now it's pretty straightforward on how you want to solve for the ending balance. You can go ahead and take your goods available and subtract your cost of your goods available. You can subtract that from the cost of your cost of goods sold. So taking 304, subtracting 180, and you can solve that, your ending balance, that way. Okay? Or what's going to happen is, when we're in our inventory worksheet, you can also solve it this way as well. You can actually take the quantity that you have remaining, multiply by the cost per item, and be able to solve the ending inventory that way. Okay, so again, my 80 items, which is my left remaining, times $1.54, you're still going to get 123.20. Okay, and at the end of the day, what you're going to do is you're actually going to be matching everything together. So if this matches and this matches, then you did your inventory worksheet correctly. Okay? All right? And that's how we're going to look at our very first costing method. All right? So notice this. At the end of the day, when you reach the end of your worksheet, and we'll talk about this in a few moments here, you're gonna have beginning inventory. So when the next batch of inventory is purchased again, you need to include your beginning inventory, and that's where we're gonna fill it out in the little section down here where it says beginning inventory. So, and then also notice things here too is, when you're actually calculating your cost of goods sold, here I have my first 100 batch, and then I have my 20 units left, and here is the breakdown on how I got my cost of goods sold. Okay. All right. Any questions here?
Where did you get the 20?
The what?
The 20 quantity.
It's because we sold 120. We sold a total of 120 units. How do we know that? It's because somebody went down to the basement and said that we only have 80 left. And we know for a fact we purchased a total of 200 items. If we bought 200 items and you only have 80 left, how many items did you sell? You sold 120. But my batches, right? I have 2 batches. If I have a box of 100, if I have 2 boxes of 200, of 100 each, right? And I'm giving somebody 120 items, I need to give 1 box of 100 away, and then I need to open the second box and give him 20 of those items to that person. So then that person can have 120 items. And then what's left? 80. Yes? Okay. So again, all this stuff will make more sense when we look into our actual inventory worksheet. So anybody else that had anybody else that has questions? Okay. So at the end of the day, when we're doing periodic inventory, right? Our assumption is that all of our inventory right now are currently existing as an expense. So what's going to happen is when you reach the end of the period, or when you actually are calculating their total amount of inventory you actually have left on hand, what's going to happen is you're actually going to convert from an expense and actually carry it over into inventory. Okay? However, here is the concept that's behind this journal. Our purchases is 200 items, but we don't actually have 200 items in our inventory. We actually only have 80 remaining. So when we solve our inventory worksheet, this is where you're going to plug in all of your answers and plug them in directly into the journal. So in this case, if at the end of the day, right, I need to move my box of purchase expense and move them into my inventory itself, I also have to know that I don't have all 200 items. I sold some along the way. So that's why you have an inventory. You're going to increase your inventory, but you're also going to increase your cost of goods sold because you actually utilize the items and you actually got rid of the items. And of course, we're going to zero out or empty out our purchase expense, okay, account. So that is the method behind this conversion, is that our purchase expense, right? We increased it with the debit. Now we're going to decrease it because essentially we're moving it from one account to another. Okay? And you need to take the whole thing out. Not just only take out what you need. You're going to take the whole thing out and you're going to distribute it amongst of your ending inventory, right? What you have actually in your inventory, and what are the ones that you actually sold. Okay, so again, from the worksheet that we just solved from the previous section, we do have this information. Our ending inventory, okay, we know is 80 items, and we know that it cost me a total of $123.20. And then our cost of goods sold, right? The amount that we sold was indeed 120 items, costing me a total of $180.80. So we're going to plug those numbers in. And again, our purchase expense, what was our total purchase expense? It was we solved it from above here. We recognized that we purchased a total of we purchased a total of 200 items, costing me $253. And then, of course, the separate freight cost me a total of $51, giving me my both ending balance on both sides to be a total of $304. So there you go. There's a perfect reflection of a journal where you're using multiple accounts, and the goal is, does your debits equal your credits? And in this case, yes, they do. Okay? So that's the last step when it comes to dealing with periodic inventory, is you need to complete a conversion entry. Okay? All right? So we'll practice this today as well. But any questions in regards to this particular section here? Okay. No? Okay, so now the next section is going to be a continuation of the previous example, because now I'm going to introduce you to what happens when we have beginning inventory. Okay? So oftentimes when you're dealing with inventory and it's being cycled over and over and over and over again, right? And you're continuing on, whether you update your inventory every 2 weeks, every month, whatever it is, you're going to start a brand new worksheet and a brand new cycle. So in this case, since I do inventory every 2 weeks, now this is going to be a continuation from the 15th all the way out to the rest of June, which is to June 30th. So here's one notion that I need to have. On June 15th, your ending balance in inventory was 80 toys. And of course, you should, from solving it from the previous one, you should know that it cost you a total of $123.20. And good news too is that we only have one batch remaining. So that's already given, all right? Now, here, we'll talk about that section in a bit when we deal with our inventory worksheet. However, now we're also making now new purchases of inventory. We made a new purchase on the 18th, and we made a new purchase on the 23rd. Each both 100 items, okay? Except on the first batch that we bought was $1.27 with a freight cost of $25, and then the second batch was a cost of $1.30 with a freight cost of $26. And then again, on June 30th, somebody went down to the basement and counted, and you only have a total of 60 items remaining in your inventory. Okay? So again, we're going to plug all of our information into our inventory worksheet. Okay? So again, on June 18th and June 23rd, as we can follow along, right? We have 127 plus 25 to give us a grand total of 152, which we solved. If you divide by quantity, the total cost per item is going to be $1.52. Now the next section here on the 23rd, as you can follow along, you had 130 plus 26 to give you a total of 156. And then breaking down the cost per item is going to give you $1.56. And again, because we only had 2 batches of inventory, and we understand that on June 30th is going to be when we actually complete or at the end of the period, the accounting period, we understand that now we're going to be doing another calculation. So I totaled up my sums again, giving me a total of 200 items, costing me a total of $257 plus $51 freight, giving me a grand total of $308 in inventory. Okay? Then I'm going to break it down and bring it back down to this exact table here. I'm going to plug in my answers just as I've been doing in the previous one, except one thing is going to be different. We actually have a beginning inventory. Now that we have a beginning inventory, now it makes sense on how to calculate the goods available. We have 80 items left remaining from our previous batch of inventory, and we just purchased a total of new inventory for 200 items, giving you a grand total of goods available to be 280. Same thing with the cost side. If it cost me $223.20 and I just purchased an additional $308, I have a total goods available is going to be $431.20. Okay? Given that we have the 60 remaining in our inventory because so our inventory manager told us that we only have 60 left, there you go. We apply that concept where cost of goods sold is going to be the goods available minus the ending balance, which gives us a total of 220 items sold. All right? And how we solve for this 220 items is going to be, again, we're going to look at our inventory worksheet, okay? Our first batch is going to be the batch that we moved over. So in this case, this batch is going to be the one on June 15th, right? Our remaining amount of balance, which is the 80 items that we started out with. Then we made our purchase again on the 18th and then again on the 23rd. So here they are reflected in the inventory worksheet in the top right. We have 80, 100, and then another 100. Giving us, if you total up that whole column, giving a total of 280. Okay? And because we're following the idea of FIFO, first in are the first to go, or first batches that you purchase are generally going to be the first ones you sell, then our assumption here is we're going to automatically take out from our first batch of 80. Well, we need to sell a total of 220. So out of that 80, how much are you actually going to sell out? You're going to sell out the whole batch because you need to sell a total of 220. So once we've done that, there's the first 80. Okay, it's going to cost you $123.20. That's the first batch. Second, now I still have let me see, how much is that? I still have 140 items remaining that I still need to sell. So then I'm going to go ahead and move to the second batch because, again, first in, first out. So now that my 80 is gone, I still have the remaining of my 2 other hundreds. But in this case, my first batch, which cost me $1.52 each, is going to be sold first. So that means here in my bottom table, I display that if I have 140 items left to sell, this 100 batch is gone. So I've already listed it right there. It's going to cost me a total of $152. All right. Now I'm left with my last batch of 100. And this time, I only need to sell 40 more. So I'm going to take my 100, or I'm going to take my 40. I'm going to multiply it by my $1.56 to give me a grand total of $62.40. Right? That's me selling 40 out of the 100 items I have available in my very last batch. So with that being said, I total up this column, right? If I total up 80 plus 100 plus 40, that would give me my 220 that I sold. If I add my 123.20 plus my 152 plus my 62.40, I'm going to get a grand total of $337.60. Once I solve for that, I plug in my answer in my cost of goods sold cost section. And now, last things last. How do I solve for my ending inventory? You can do either or, but general rule of thumb is to make it easier for you, instead of calculating the cost the cost per item and the quantity, just go ahead and take your goods available, which is the $431.20, and just simply subtract out the $337.60 to get you your grand total of $93.60. So as you eliminate from your inventory worksheet, what you're going to have left remaining is 60 items at $1.56, which is, again, grand total is going to be $93.60. Okay. All right, so again, this is a little more details because we're adding an extra number. Wait till next week when we actually have to also add in our returns and allowances. Okay, so again, everything is going to be a step-by-step process in this class. Okay, so this example will become more clear when we actually do the in-class exercise. So now we got to complete the conversion entry one more time. But this time, we have to add an additional entry or an additional account because we have a beginning balance now. Because in our previous first one, we've actually recorded that we have a debit balance in our inventory item, which is the toys. Now that we got rid of those toys, we need to credit it then because now we're decreasing the amount of inventory that we actually have. And in this case, that's exactly what it says here. Now in parentheses, I kind of indicated so then you know where to which answers go where. So the first one is going to be recognizing that no matter what, because at the end of the day, you still have 60 units remaining left in inventory. So in this case, my ending balance, which was $93.60 for my 60 items are remaining, that's the first thing I'm going to be transferring over. Okay. My cost of goods sold, which we solved for, was the $220 at the $337.60. That's going to be plugged in right here. Now this is where the credits come in, and it's a little confusing because, again, your purchase expense is only going to reflect the new items that you've purchased. So again here, for the $257. And then again, same thing with the freight expense. It's only going to reflect the new items that you've purchased. So again, for $51. Now this is where you need to also get rid of your beginning inventory, which we know what it was. It was the 80 items remaining for the $123.20. We plug that in. Now our debits and our credits balance. They are equal to each other. All right. Any questions in regards to this conversion entry? Again, all this stuff will make more sense when we actually dive into completing the actual exercise. Okay. So again, chapter 5 review, or at least this section here, is we talked about what happens when we have periodic inventory. We understand how to journalize it, right? First thing we recognize is purchase expense and freight expense, and for however you paid for it, that is that. Okay. Now, again, when we're dealing with periodic inventory, we need to also remember that when we actually have a physical count and we actually complete our inventory worksheet, that is where we need to have a conversion entry, where we convert our expenses into an actual asset. But again, when we convert our expenses, we need to also assume that not everything is going to be transferred into the inventory. It's going to be sold along the way. So that's why we have a cost of goods sold account. Okay? And that's it for chapter 5.3. Okay? Any questions in regards to 5.3? Okay? So here you go. I'm going to go ahead and pull up the exercise. What we're going to do is we're going to complete the first section and then complete the second section after break. So the first section here, okay, as you can see, this is what the inventory worksheet looks like. As you can see, it's definitely a lot bigger and there's a lot more room for a lot of things. So the first column here is, again, I tried to mock the left side, which is understanding the very first column, which is your date, your quantity, your unit price, your purchase price, freight expense, and then your total cost and your cost per item. So that part you've seen before. Now, the next section I want you to understand is going to be on the right side, is going to be the last three columns, which is your quantity, your unit price, as well as your, that's supposed to be cost per item, and your total cost. Now, this section here is your inventory on hand. You only use this section when you have beginning inventory. Okay, and you'll understand how to use it when we actually do the second problem after the break. So again, the first section is just dealing with just your purchases and purchases only. The right side is going to be dealing with beginning inventory if it exists. Okay, and then if I scroll down, this is the section I was talking to you guys about. You have your section here where you're filling in your information and you're solving for your ending balance as well as your cost of goods sold, okay? And this section here is basically your workspace. This is where we're actually going to be cell referencing, and we're actually going to be solving for the cost of goods sold or ending inventory, whichever one that you want to solve for. But in this case, I want you to utilize this little workspace to just solve for the cost of goods sold. Okay? And then again, we'll talk about utilizing this last 3 columns, which is your purchase returns and allowances, and see how that actually affects this column here. Okay? This we'll talk about next week. Right? But another thing that I made it a little easy and friendly to recognize as well as too is I've also indicated here in parentheses what's your general calculation here. So if we're starting off with our purchases, you want to subtract any returns and allowances. You're going to equal them. Then you're going to add your freight, and then you're going to equal up your total here. And then same thing here. When you have beginning inventory, you're going to add together your net purchases and equal them up to get your total goods available. Then, once you get your goods available, you're going to subtract out your ending inventory in order to get your cost of goods sold. So these little things right here on the left side is going to give you a reminder of what you need to do when completing this entire worksheet. Okay, so I have the Excel file available in the study materials that I've uploaded on there, and we'll talk about that when we get closer to the exam and what I am going to have you guys know. But for practices purposes only, it is, if you need a bunch of these, they are going to be, I have the preset one for each exercise, but if you just want to practice on your own, just utilizing and just being more comfortable with this worksheet, it is available on the study materials. Okay? So let's go ahead and get started with our little scenario here. As you can see, the first thing it says here is your inventory method is going to be periodic and it's going to be Fifo. So let's look at this detail a little more closely and let's go ahead and practice just filling out your table. Okay, so for today, we're not gonna make it too complicated because right now I just need you to understand how to fill out the worksheet, and then next week we'll combine every single concept. Journalizing, worksheet, and then what happens when we have a purchase returns and allowances. Okay? So for today, let's go ahead and get started. So on April 5th, okay, we made a purchase of 1,000 units at $5 each, and freight cost me $100. So I'm going to go ahead and go into my worksheet, and now I'm going to fill it out. So on April 5th, okay, I have 1,000 items costing me, what was it, $5, with a freight cost of $100. So again, these, I actually purposely had you guys, I purposely not formatted this worksheet so you guys can exercise also practicing how to use Excel. Since you guys took the class, you guys should know how to format this exactly how you guys want it. So in this case, I'm doing comma style because I don't want no dollar signs to be cluttering my worksheet. So there you go. So again, what was my formula for my purchase price?
1,000 quantity times price.
Exactly. So again, this is basic punching in standard, math symbols, right? I just simply did a cell reference. I'm cell referencing E6 and I'm multiplying it, B6, and I am multiplying it by C6. And then I just press enter. And there you go. I get a grand total of $5,000. Okay. What is my total cost going? What's the formula for total cost?
purchase price plus freight.
Mm-hmm. Which is going to give me 5,100. Okay, simple as that. I just plugged in the formula just like that. Now, again, you can also calculate it yourself if it makes it easier for you. You can type the 5,000 times the or 5,000 plus the 100. That's completely fine. But the whole purpose of you guys utilizing Excel is to also being able to not type less. You want to just be able to cell reference and be able to calculate it that way. So there you go. I have 5,100. What is my cost per item formula?
Total cost divided by quantity.
Good. So I take my 5,100 and I'm going to divide it by my 1,000 to give me a total of $5.10. Okay? Good. I'm done. I've filled in my worksheet. There's nothing else left to do, and that's exactly how you fill it out. Okay? Next scenario says that on April 10, you purchase another 750 units at $5.75 each, and freight cost me $75. Okay? So again, April 10, I purchased 750 items at $5.75, and my freight was $75. So same thing, straightforward. My purchase price formula is going to be quantity times my unit price, which gets me what? What's my total here?
4,312.50.
Good. And then again, applying the formula for my total cost. What's my total cost going to be?
4,387.50.
And now, what's my total cost per item?
5.85.
$5.85. Okay? And we'll talk about what happens when these numbers become like you have an unrounded number, so a number that's going on and on and on and on. You have the choice, and that's what I'm going to talk to you guys about. You have the choice to either round now or round later. Now, my suggestion and my overall idea and thought about rounding, do not round until the very end, because especially if you're selling thousands of items, you round off too early, you're going to actually cost yourself too much money. Okay? So we'll talk about that when we come into that scenario. So then now that we have that and we completed this, what is next? Next is April 20th. We purchased another 200 items at $6 with a freight cost of $20. So again, I'm going to plug in April 20, and I bought 200 items at $6 with a freight of $20. So what's my purchase price going to be here?
1,200.
Good. And then what's my total cost going to be here?
1,220.
And then lastly, what is my cost per item here?
6.1.
Yes. Say that again? 6.1. Okay. Good. Now let's see what else happened here. On April 25th, we also purchased an additional 500 units at $6.25 with a freight of $50. So April 25th, we purchased additional 500 items at $6.25, and then plus an additional 50. So what is my total purchase price here?
3,125.
Okay. Now, notice, why am I typing all this in? If you guys are pretty much experts at Excel or more familiar with it, yes, for this one, you can apply the fill tool. So here, I already have the formula. If I click on it, I have a relative formula going on right now. So what I can do is I can go to this little green little square here, and I'm able to pull this formula down. In fact, I can pull this formula all the way down if I wanted to. But that's it as far as I don't have any other information because that's the last thing I have here. So again, not only can I apply it here, I can also apply it here as well. So I can go ahead and do that, and I can also apply it here. So everything that you can do is when you plug these numbers in, you can even simplify it even quicker by pulling down and dragging the formula, copying it into every cell, and you can imagine that you can fill this form out a lot quicker. All right, so now that I have all my details, let's go ahead and look at my scenario one more time. On April 30th, you have a total of 600 units left on hand. So now I'm going to go ahead and scroll down real quick and go to my ending balance and fill it in under quantity that I have 600 items. Okay? So now the first thing I'm going to do is I'm going to total up my total quantity. So this one is pretty simplified. It's pretty simple. And it's the one that we commonly use the most in accounting is going to be your equal sum function or formula. Okay? So there you go. You can type it in. Make sure you press tab to activate it. Hold on, let me go ahead and do that again. So equal SUM and then tab to activate it. And what I'm going to do is I'm going to select from this top one all the way down to this bottom one. Okay? And there you go. I get a grand total of my total quantity between 2,450 items. Now, if you can drag a formula going vertical, you can also drag it going horizontal. Okay? So, okay, I don't need this one. Okay, and I don't need this one. Okay, and then of course all of these ones are going to be rounded, so you want to make sure that they are reflecting however you want to reflect it. So there you go. I didn't have to sit there and do equal sum for each column. Once you apply a formula and you want to apply it across, you can do that as well. But you can do equal sum for every single one. But by doing this, I eliminating having to enter in that formula once again. And if I click on this, right, it will highlight that this is the sum of this entire column itself, hitting all these numbers. So there you go. That's how I calculated the total sum of my purchase price, which is the $13,637.50. My total freight was $245, and my total cost overall is $13,882.50. Okay, so this is where cell referencing is going to come into play as well. Now I'm filling out my second half. Now that I completed my first half, all right, now this is where I can go ahead and say, well, how much total quantity did I purchase? I've already solved it right here. Copy and bring it down. Okay. My total cost of purchasing just all of that inventory is going to be the $13,637.50. Okay. And again, we don't have any returns or allowances. So here, this is where I was talking about my formula. I'm going to go ahead and subtract, right? I'm going to take my $2,450 and I'm going to subtract out my returns and allowances to get me a subtotal. Okay? Same thing with this side, right? I'm going to take my $13,637 and I'm going to subtract out my 0 to give you my subtotal here. Okay, of my $13,637.50. Now I'm going to add my freight. Again, freight doesn't have a quantity value, but it does have a cost value, which we did solve up here, which is the $245. Once I've done that, now I have to do my total net purchases. So I'm going to add my subtotal plus my freight, which in this case, quantity has no effect. But my cost is going to change. And it's going to look like this. And here, we can go ahead and verify that the 13,882.50 is in fact the same right here when I found out what my total net purchases is. Okay. All right. Is everyone with me so far? All I did was copy pretty much everything from up here.
So you just copy the subtotal.
Correct.
Subtotal 2,450. You just copy from purchases.
I copied it from this table above here. Okay. Because this is the total amount of purchases I actually bought. Right? We calculated it right here.
Yeah. But the thing is, so you just bring down the subtotal 2,450.
Yes, if that's the way that you want to do it, you can just go ahead and bring it all the way down. However, this is only a factor because this basically is just an easier way to kind of see where everything goes. But don't forget, if we have a return or purchase returns and or an allowance, it's actually going to affect your subtotal. Okay? It's just because today I'm not going to teach you this yet. So right now I have 0 returns and 0 allowances. So therefore my subtotal is going to reflect my total purchases. Okay? So how this formula is, it's going to be my purchases subtract. Remember, these are your indicators right here. You're going to subtract any returns, any allowances. And this stuff will make more sense once we get there. But I just really need to make sure that you guys understand this concept right here is you're not just bringing it down. You're actually making a calculation every single time. Okay? Because this will affect this number when we actually have returns and allowances. Okay? Okay. So now that we have our total net purchases, right? We have the 2,450 at costing me a grand total of the 13,882.50. Now, of course, now we move on to the bottom half where we're actually calculating our cost of goods sold. So because we didn't talk about having any beginning inventory, that's automatically assumed that it's 0. Okay? And then the next section here is asking me to add any net purchases. So in this case, my net purchases is what we solved from above here, right? We just bring those down. Okay? All right? And then now my total goods available, again, you need to apply that formula. It's going to be your beginning inventory plus your net purchases, which gives you, of course, because we don't have any beginning inventory, it's going to be exactly what you had your net purchases for. So now I have my total goods available, and I can go ahead and proceed with the next calculation, which is to solve for the total quantity of my cost of goods sold. So if I started out with 2,450 and I have a remaining of 600 left, what is my total items I actually sold?
1850.
1850, okay? Now this is where I'm going to go ahead and show you how to get this, how to do the cost itself. So give me 1 second, I'm going to go ahead and enter in my little formula here, and I'm going to show you how to utilize this little worksheet to solve for the cost of goods sold. Okay? Okay, so again, here's a little section where I had my quantity, my unit cost, and I had my total cost. Now this is what you're going to use this section for is, in fact, you're going to pull information from above here and bring it down here. So let me try to shrink this so we can kind of see everything. That's a little too small. Okay, there you go. But so our main goal here is that if we sold a total of 1,850 items in grand total, right? That means when we're starting to calculate this, we need to calculate or get rid of 1,850. Now we have a total of 2,450 items available. Now we're going to apply the concept of first in, first out. Now let's look at my batches, okay? Which one's the first batch that we purchased?
April 5th, 1,000 units.
Correct. That's the first thing I purchased. Now let's look at this carefully. How many items did I sell?
1,850.
So how much out of this entire batch am I going to sell? Or all of it? Good. So this is where I'm going to go ahead and copy the information down here. So if I sold my first 1,000 units, right? I don't actually have to calculate the actual cost per item because I'm getting rid of the entire amount anyway. I know that for a fact this entire batch right here, it's going to cost me $5,100. I don't need to calculate that. So that's where I'm going to go ahead and copy this information right here. Okay? Now, for class purposes, what I'm going to do is I'm going to make it a little user-friendly so you guys can, when I post the answers, you guys know where this number came from. So what I'm going to do is I'm going to actually copy the cost per item here. So when we follow this line along here, what we do is we're going to extract this $5.10. Okay? That's how much it's going to cost me to sell each item. So if I'm going to sell out this whole entire quantity of 1,000, right here, my total cost is going to be my formula of this multiplied this, right? Quantity times the unit cost is going to give me a grand total of $5,100. Now, as I can see, I made a little sum here. So now I have a total so far sold was 1,000 units. Okay. Now, what about my second batch? Now that I got rid of my first batch of 1,000, right? I can't really eliminate it here. But what batch comes next?
April 10th.
April 10. So you have the 750 units. Now, out of the 1,000 units, right, or 1,850, how much am I going to take out from the 750 items?
All of it.
You're going to take all of it. So there you go. Same thing here. We're going to copy the 750 here. Whoops, 750. And we're going to copy the cost per item here for practice purposes. So it costs me $5.85 each. We're going to go ahead and multiply that across to give me a grand total of the $4,387.50. Now, I've calculated a total of 1,750. How many more units left do I need to sell?
100.
100. So there you go. I'm going to pop that in right there to get me a grand total of my 1,850. Now I eliminated my first batch of 1,000, my second batch of 750. What batch comes next?
April 20th.
April 20th. And how much is it going to cost me to sell an item from batch number 3?
$6.10.
Correct. $6.10. So there you go. I'm going to copy it right from here. And of course, I'm going to copy my formula all the way down to. Now, that's going to cost me 610 cents because this is what 100 times $6.10 equal 610. And because I've already initiated my equal sum formula, no matter how much I'm adding in here, it's going to calculate the total as I keep adding information here. So for if you look, sorry, I cannot get it to be right where I want it to be. So if I look at my little table here, I have a grand total of 1,000 plus 750 plus 100 gives me a grand total of 1,850. So 5,100 plus the 4,387 plus the 610 is going to give me 10,087.50. And what I can do is I can take this and I can pop it there. And then now all I have to do is solve for my ending balance, which, what is that? It's going to be my 13,882, because that's what I have available, minus out my cost of goods sold, and how much is going to be my total amount that I have for ending inventory. What is my total calculated amount for ending inventory?
$12,785.
Oh, I hit the wrong button if it's. I got 3,780.
3,785.
Yes, I got this number right here. So all I did was I took my goods available and I subtracted out how much I actually sold in order to solve for what I have remaining. Okay. Now, yes, you can also solve it this way if you can understand what's left over in your inventory, right? You should still have this 500 plus you should still have this 100, gives you a total of 600. And calculating it that way. And yes, you would be able to solve for that. So there you go. That is how I solve my inventory worksheet. Okay. A lot of math involved, but again, as long as you can understand where things go, I even have little indicators to kind of help you along the way. But just understanding how this is how we cost out the things that are that we sell. And in this case, we're actually selling out our cheapest stuff first instead of reverse around where you should actually sell out your more expensive things first. But we'll talk about that tomorrow when we look into LIFO, getting rid of your last balances. Okay? Now, one more thing before we go on break is I do want to go ahead and now that we've completed our inventory worksheet, the next thing that we have to do is complete our conversion entry. So, again, a conversion entry happens when you actually physically are at the end of your given period and you've calculated your inventory worksheet, you've completed it, and now you're going to go ahead and enter it in. So April 30th is going to be my day because that's when I found out that I have exactly 600 items left in my inventory. Now in this case, I'm not actually specific on the item I actually purchased, right? I was vague because I just wanted to make sure that you understood what this was about. So this is units. If I don't know what the item is, your general rule of thumb is you're going to just associate it that it's going to go straight to inventory. Okay? So again, I'm going to go back to my journal entry here. Since the first thing I know is I have ending inventory. My ending inventory is basically what I have left, and that's what I am going to recognize is that I have inventory. Okay, that I'm converting it straight to inventory. But the one thing that we had to also recognize here is that we sold cost of goods sold, that we sold some items along the way. Okay, and because we're converting our purchase expense and our freight expense, right? So think of it this way. you fill up one bucket full of items, right? You have a bucket called purchases, you have a bucket called freight, and you have a bucket called inventory. Imagine it this way. You're taking your purchase expense bucket and you're dumping it into your inventory. Same thing with the freight. You're taking it and you're dumping it into another account. So that's essentially what we're doing. When we debit it by filling it up, and then we're going to credit it by removing it. So that's exactly what we're essentially doing. We're zeroing out the account. Okay? Now, where do these numbers come from? So what was my total ending inventory balance?
600.
That's the quantity. What's the cost of it?
37.85.
37.85. So that's exactly where you're going to place this information here. So for this one, I can go ahead and cell reference. So 37.85. Okay? How much did it cost me to sell my items? How much did it cost me to sell my items?
$10.97.50.
Yes, that's how much in total I sold. Now, how much was it in grand total of how much I actually purchased?
$13,882.
Okay, that is the total cost. That's including freight. But in our scenario, when we journalize it, we need to keep our freight separate. So how much was...
$37.50.
Yes, so in this case, my total purchases is going to be the 13,637. And in this case, what's my total freight that I actually calculated? So in this case, my freight was a total of 245. Okay, so what you're going to do now is, now that I've finished journalizing, I'm going to double check to see if this statement, did my debits match my credits? Okay, that's always rule of thumb before you move on to the next transaction. Okay, I'm just going to check it right now. So both of them look, they're both the same, 13,882.50. Okay, which if you notice, that's your total cost of your entire inventory. Okay? All right. All right, so we're going to practice this with beginning inventory in the next section. So right now it is exactly 10:03. So I'm going to call break at 10:05. Go ahead and take a 20-minute break. So please be back no later than 10:20. I'm sorry, wait, I said 20-minute break. Where am I? 20-minute break, so please be back no later than 10:25. Okay?
Okay.